Here are the crypto top headlines covered in this video. Ripple exploring $7.5 trillion daily FX market with AMM and liquidity pools. Next, Bitcoin fees skyrocket. Community divided on Ordinals. Also, spot Bitcoin ETF will be Bloodbath for crypto exchanges, Analyst says. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ripple exploring $7.5 trillion daily FX market with AMM and liquidity pools. A Ripple director has confirmed that the payment firm, like the Bank for International Settlements, or BIS, is exploring ways to tap into the $7.5 trillion daily FTX market. This disclosure came via Joe Volono, Ripple's director for CBDC business development, in an online meeting. During the session, the discussants elaborated on BIS's Project Mariana. The BIS launched Project Mariana to envision how trading and settling FX could evolve in a tokenized world. In a clip announcing the project, the Bank for International Settlements stated that the largest financial market globally is the foreign exchange market. This market experiences a daily trade volume of $7.5 trillion. With Project Mariana, the BIS believes the prospect of a tokenized financial system to revolutionize current markets is imminent. Notably, the project is a joint venture with the central banks of France, Singapore, and Switzerland. Ripple director confirms Ripple's exploration. Commenting on Project Mariana, Ripple director Joe Volono remarked that it is a captivating initiative that Ripple is currently delving into. In his words, Project Mariana is a fascinating body of work, and it's something Ripple, in parallel, is exploring. Prominent XRP community figure Crypto Airy shared the snippet of Volono's remarks on X.
So first of all, on Project Mariana, that's a fascinating body of work, and it's something Ripple in parallel is exploring. How we can facilitate cross-border, cross-currency transactions using an automated market maker.
Furthermore, the Ripple director affirmed that the exploration involves facilitating cross-border, cross-currency transactions utilizing an automated market maker, or AMM. Additionally, he stressed that liquidity pools play a crucial role in the effective functioning of the models proposed in Project Mariana. Project Mariana proof of concept done. A few weeks ago, the BIS announced a successful conclusion of the test. Per the disclosure, the project focused on testing the cross-border trading and settlement of wholesale central bank digital currencies, or WCBDCs, among financial institutions. For this purpose, it employed the public blockchain's DeFi technology concept. According to the report, the POC of Project Mariana validated the cross-border trading and settlement of simulated wholesale central bank digital currencies. The WCBDCs were denominated in hypothetical euros, Singapore dollars, and Swiss francs among simulated financial institutions. Notably, the process hinged on three key components. The first was utilizing a shared technical token standard a public blockchain offers to enhance exchange and interoperability among diverse currencies. Secondly, the process relied on implementing bridges to ensure a smooth transfer of WCBDCs between various networks. Thirdly, it hinges on integrating an AMM a specialized decentralized exchange designed to execute and settle spot FX trades automatically. XRPL AMM. Notably, the XRP community awaits an AMM on the XRP ledger pushed through the XLS-30D amendment. The AMM launch is pending the consensus of validators, which has yet to meet the required threshold with ongoing voting. Recall that Ripple has disclosed incorporating XRPL DEX into Ripple Payments solution. Our next top headline, Bitcoin fees skyrocket, community divided on Ordinals. Bitcoin fees have become a hot topic, triggering diverse opinions as the cost of sending BTC reaches abnormal heights. BitInfo Charts, a statistics resource, reports an average transaction fee nearing $38 as of December 17th, stirring a debate among Bitcoin enthusiasts. The surge in fees is attributed to the recent influx of Bitcoin Ordinals inscriptions, causing a spike in transaction costs for all network users. According to the BitInfo Charts report, the current on-chain costs are the highest since April 2021. On the other hand, mempool.space reveals the vastness of Bitcoin's mempool, with around 300,000 transactions awaiting confirmation, with some paying a fee as low as $2. Notably, mempool is a virtual pool collecting all unconfirmed on-chain transaction backlog. Height Bitcoin fees, a heated debate. Notably, the high on-chain fees make spending impractical for small investors, resulting in a heated debate among Bitcoin proponents. While some are critical of the impact of Ordinals on fees, influential Bitcoin figures argue that double-digit transaction costs are a glimpse into the future. Popular Bitcoin analyst and advisor Hodolot commented on the matter on X, stating, "Kinda blows my mind that so many people seemingly have never reflected on the obvious fact that fees will be high with high demand for block space. Fees are currently artificially and temporarily high due to JPEG clownery, but it is nothing more than a glimpse into the future." The debate extends to the core principles of Bitcoin, with arguments against demanding low fees for Level 1 transactions, considering it an attack on the network's fundamentals. Some suggest investors use Layer 2 solutions like the Lightning Network, designed for mass adoption as a shield against rising fees. Despite the ongoing controversy, Bitcoin continues to function as intended, claims commentator Beautyon. He posted on X, "If Ordinals bring the high on-chain world to everyone earlier than expected, it will act as a scythe, cutting down everyone who did not accept a Layer 2 solution to the network fee problem." Bitcoin veteran and co-founder of Blockstream, Adam Back, supports the expansion of Layer 2 capabilities as a solution, highlighting that attempting to hinder the trend would only result in potentially worse alternatives. He stated, "You can't stop JPEGs on Bitcoin. Complaining will only make them do it more. Try to stop them and they'll do it in worse ways. The high fees drive adoption of Layer 2 and force innovation, so relax and build things. JPEGs won't be there in the future," says commentator. Notably, the United States National Vulnerability Database, or NVD, recently raised concern over Ordinals, classifying them as an exploit of the Bitcoin code. Commenting on the Bitcoin Ordinals inscriptions, Hodolot stated, "JPEGs are very regarded. They will not be there in the future, priced out. Well, in reality, they are priced out now, but grifters and attackers seem prepared to lose a lot of money temporarily." Record high miners revenue. Meanwhile, data from blockchain.com reveals miners' revenue value in block rewards and transaction fees paid to miners reaching levels close to those of Bitcoin's previous $69,000 all-time high in November 2021. Interestingly, miners' revenue currently sits around $63 million as of December 17th. While these elevated revenue levels reflect a thriving industry, they also result in increased investment in mining operations, advancements in technology and infrastructure, and the strengthening of the overall mining sector. Additionally, the positive financial outlook may attract more participants to the mining space, contributing to the continued growth and evolution of the industry. Notably, the digital asset is trading around $42,000. Our next top headline, Spot Bitcoin ETF will be bloodbath for crypto exchanges, Analyst says. Spot Bitcoin ETFs could trigger unwanted consequences for crypto exchanges like Coinbase due to lower transaction fees, according to ETF analysts. While the crypto community eagerly awaits the possible approval of a spot Bitcoin exchange-traded fund in the United States, some analysts are warning this could potentially trigger unwanted consequences for cryptocurrency exchanges. Several industry observers have predicted that a spot BTC ETF could start trading in early 2024 in an event that, when paired with Bitcoin's upcoming block reward halving expected in April, Blockstream CEO Adam Back believes could propel BTC to $100,000. Bitcoin proponents such as Jan3 CEO Samsun Moh have said that approval of a spot Bitcoin ETF in the US could even drive Bitcoin as high as $1 million in the days to weeks following. But the forecast isn't that optimistic for centralized cryptocurrency exchanges, according to ETF Store President Nate Geraci and Bloomberg ETF analyst Eric Balchunas. Once approved, a potential spot Bitcoin ETF in the U.S. would be a bloodbath for cryptocurrency exchanges, Geraci wrote on X on December 17th. According to Geraci, retail spot Bitcoin ETF buyers and sellers will benefit from underlying institutional trade execution and commissions. On the other hand, retail users of crypto exchanges will get retail trade execution and commissions, Geraci noted, stressing that those will need to improve to compete with a spot Bitcoin ETF. Bloomberg ETF analyst Eric Balchunas emphasized that a spot Bitcoin ETF will cost 0.01% to trade, which is the average fee for ETF trading. In contrast, trading costs on exchanges like Coinbase reach 0.6%, depending on the cryptocurrency, transaction size, and trading pairs. Once approved, a spot Bitcoin ETF will create more price competition in the crypto industry, bringing money back to investors from exchanges that spend massive amounts of cash to advertise their services at events like the Super Bowl, Balchunas believes. It would be the last crypto Super Bowl if they launch ETFs, because ETFs are such a thin, rough industry, and some of these crypto exchanges were sort of selling populism, making a ton of money on their really high fees, he said in an interview with industry journalist Laura Shin in September 2023. Historically, Coinbase has earned most of its revenue from transaction fees. In 2022, Coinbase made $2.4 billion in transaction fees from institutional and retail investors, which accounted for 77% of its total net revenue of $3.1 billion. The firm has been working to cut its reliance on fees, though, actively diversifying the revenue streams to other income-earning services such as subscriptions. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.